Now, what is a tax treaty? We said there is a tax treaty between state R and state S. But what exactly is a tax treaty? A tax treaty is nothing but an agreement. Just like you have contracts or agreements in commercial parlance, even a tax treaty is nothing but an agreement which governs the taxation of residents or nationals of two sovereign countries. In the previous example, we saw the taxation of state R. You had RCO. The taxation of RCO was governed by the tax treaty between state R and state S. On the contrary, if the company in state of source, let's say ESCO, were to receive any income from a person in the state of residence, the taxation of that income would also be governed by the tax treaty between state R and state S. A tax treaty is a legally binding international agreement. What this means is that once a tax treaty is in force and there is a provision to it, then the sovereign countries who have entered into a tax treaty have to abide by the terms and conditions of that agreement. They cannot simply refuse to abide by those terms and conditions. Now, there can be a situation where there could be issues around the interpretation of what was concluded in the agreement. And for that also there are various aids to interpretations, various rules to interpretation. That difference of opinion can be there. But once the agreement is there, you cannot go back and say, I am not going to apply this agreement. So in the previous example that I took, we knew that in the state of source, the withholding tax rate was 15%. But in the tax treaty, the rate was 10%. Now state S cannot say that I am not going to apply 10%, but I will apply 15%. That you cannot do because these are legally binding international agreement. If a country does not abide by the terms and conditions of this agreement, they can be taken to international courts for the implementation of such agreements. The treaty terms, which means various clauses of the treaty, are a result of negotiation between two governments. Now there are various model tax treaties which act as a starting point. So you have UN model of treaty, you have OECD model tax convention, and you have US model. These all are starting point. But at the end of the day, just like any other commercial contract, even a tax treaty is nothing but a result of negotiation between two sovereign governments. There is nothing in the tax treaty that is going to be discussed or agreed between independent parties. They can negotiate, they can agree on terms which they would not otherwise enter into with a third government. So depending on their mutual economic relationship, depending on the volume of trade, depending on their business interest, two governments can discuss and agree on terms and conditions in a treaty which they may not have in other treaties. So let's say, for example, R and S may agree that any capital gain which arises in the source state will not be taxable. Whereas R may have another treaty with M where capital gain might be taxable. So it's a question of negotiation between various governments as to what clauses will be there in a particular tax treaty. The revision is obviously permissible. They can be done through mutual agreement between the two governments, and they can decide whether they want to amend the treaty, whether they want to remove certain provision, whether they want to add new provisions. All that is possible because this is just like any other commercial contract where negotiation, etc. can be done. Now, globally, if you see, there are three principal models of tax treaty. A model of tax treaty is nothing but it is a standard contract that can be used for the purpose of entering into a tax treaty. Now, instead of every government or every country having a different format, generally what was done by OECD group of countries or the UN or the US is that they drafted certain model tax treaties which can be acting as a starting point. Now, depending on which country you are, what is your interest, how does your interest lies, you can choose a particular model convention as a starting point for treaty. And then between the two governments, like I mentioned in the preceding slide, you can negotiate as to which term should be there and how it should be interpreted. So the most commonly used version is the OECD model. This is basically developed by the OECD, Organization for Economic Cooperation and Development. They are the ones who've developed this model. And it's a general perception, not necessarily, because end of the day, OECD model is not accepted as it is by all the countries in the world. They agree on certain terms, they disagree on certain terms, and there are negotiations. But this is the one which is widely used for the purpose of most of the tax treaties. Then there is a UN Model Tax Convention. Principally on a large amount of information and data, these two model tax conventions are same. But then there are certain differences between the two of them. We are going to cover that towards the end of our course in terms of what are the differences. So principally, we are going to interpret the OECD Model Tax Convention for the purpose of this course. But at the end of this course, we are also going to outline as to what are the differences between the OECD Model Tax Convention and the UN Model Tax Convention. And then there's a US Model Tax Convention. And this basically is used by US when it enters into tax treaties with different countries. While understanding all these three models, one suggestion I have is look at what is the latest version of the commentary on these treaty and consider that for the purpose of interpretation. However, the point is that these treaties are not, the commentary on these treaties are not regularly modified. They are modified after a period of time. So therefore, even if you are looking at a particular commentary, the latest version of the commentary, you should see what are the subsequent developments that have taken place and how they interpret or apply to the case which you are looking at before taking a final decision as to what has to be done. Thanks for watching this video on international tax. If you want to enhance your career in international tax and learn everything about how to interpret various articles of a tax treaty, learn about BEPS, global minimum tax, and similar concept, you can subscribe to our online course on international taxation, whose link is given in the description below. If you have queries, you can reach out to us. Look forward to having you on board with us for our course.